Bill Scotting, CEO of First Tin. Welcome back to Rapallo, mate. How are you going? How's it been in the last year?
It's going very well. Thank you, Simon. Great to be here again. Wonderful location. We put the weather on this year.
Yeah.
We're doing well. Tin's on a roll. The structure stories continuing to develop really, really nicely. Where the price is going up, almost driven by three things. Fundamentally, from the van sides, very good. The energy transition, the digital transformation is just, nicely pulling demand up. And then where it gets really interesting for tin is the supply side. The current producers can't keep up. Over 90% of tin is coming from emerging and developing countries, and the reliability is just not there. In the last 2 years, we've had outages in South America, so in Peru, Bolivia, Brazil, because of social reasons. 2 years ago, Bar Province in Myanmar went out of business. It's now supposedly starting. That'll be a long, slow haul back. Indonesia, the other main supplier, the government's been clamping down on the artisanal mining, the offshore dredging, trying to get control of that. So they've had 40% reduction in supply. Right. And then the new kid on the block, which was the DRC, this year, for March and April, we lost 6% of global supply when the civil war in East Kivu kicked off again with the M23 guerrillas in the governor. So the supply side's really problematic, the tin. And then you look at the new supply, because going to need new supply, and the pipeline's really, really thin. So these three factors are what's driving tin. It's the best performing base metals.
Oh, is it in the last year?
Yeah.
Or this year?
The years.
Yeah.
It's really the best performer. It's staying in there because of these structural fractures.
Right.
It doesn't get the headlines of some of the other metals, say lithium or copper, but it's got the best structural dynamics up there, and it's reflected in the pricing.
Right. Bill, I should have said at the start, I'm Simon Catt from Catt Calls in Arlington, and of course we know each other quite well because we had a few shares and sometimes see you around the Arlington office on Piccadilly in London. Have you been buying any shares in the company in the last year or so?
I've bought some.
Yeah.
I have something over 0.5% of the shares now, which I've bought over the last 18 months since I've been in there.
And you've been around a while. Like, what are your personal expectations on the First Tin share price and how much money you might make? I mean, you didn't have to do that. What do you think about the outlook for the shares?
Look, I'm very positive. I like tin. Before I joined, I did my own analysis too. So the structural dynamics in tin are outstanding. Probably the best I've seen since iron ore 20 years ago. I don't talk about the precious metals because I don't know them so well.
Right.
The bolts and the base, exceptional. And I love our projects. Australia, Germany, they're tremendous projects. And I believe we get those permitted, bring those into production. The share price, which has, been pretty low ever since, last 2 or 3 years after the reset after the Ukrainian situation kicked off. They've come up maybe 30% off the bottom. They will re-rate, in my view. Once we get permitted, once we then get finance, once we're into an actual construction, the projects get real, and then into construction, these share price will re-rate. And if I take a metals and mining basic metric of mines in production of 5 times EBITDA, if we look 5 years down the road, our share price should be 10 times what it is today.
Okay.
And that's the sort of, I wouldn't say I'm sitting there waiting for 10 times, but I'm very, very positive about the outlook. I know we've got a few long-suffering shareholders like Arlington who have been in for a while, bought in at somewhat higher levels. But tin is a great metal and they're great projects and a great resource base. You've got the 4th biggest resource base outside China in tin. Logo Catt provides us with a lot of growth options going forward as well.
Right. Yeah, well, look, speaking on behalf of Arlington, Bill, Charlie and I obviously believe in you and the First Tin projects. It's certainly cheap enough, trading at a fraction of MPV. And I think the market, like for any junior mining company, wants to know about how you're going to fund it and how you're going to build it, because junior mining companies don't normally have all those resources inside. What would you say is the answer to those questions? Funding it and building, and which comes first, the Australian or the German tin mine?
Yep. So since I've been in, we've focused much more on the Australian. I said because it was further advanced in the environmental studies and permanent, and that remains the case. In terms of funding, that's a really interesting question. We raised 10 million last year from basically the core shareholding group, and that's given us the runway, the financing for the program we're doing at the moment, which was to complete the environmental impact studies in Australia, to do the value enhancements. So we've got a drilling program on now, infill extension drilling in Taronga, which allows to convert a lot of inferred resource to measured indicated. It allows to extend the life of mine, and that's going to create a lot of value. And we're doing a lot of work on net testing to improve the recoveries. So Taronga's DFS, which we published just over a year ago, will get enhanced. And I think I'm having multiple discussions from potential off-takers and allied government-linked financing in multiple geographies.
Yeah.
So those discussions are positive. I don't think we'll have a problem with offtake to the tin because of the structure and supply-demand issues. And I think once we get a line of sight on the permitting timeline, then that financing will come into play. And it'll be primarily a government-backed debt financing allied with some equity.
Okay, interesting. Okay, well, I mean, so we've got, first thing, I've got Australian and German projects, and I think if your metal goes to other countries that have processing capacity, then that's where the potential offshore sovereign funding might come from.
Indeed. So the offshore sovereign funding, they're always looking at the concentrate finding a home in that country.
Right.
And there are smelters in these clear regions, which we're in discussion with for that offtake. And so you link the offtake to it be government-type finance.
And Bills, how does that work? Thinking about the fact that Metals X owns about 30% of First Tin, Metals X, the oldest and best-known Australian tin producer from the Renison Bell mine, they have a Chinese partner, Hunan Tin, the world's largest tin producer. How do you see the financing and the future of First Tin strategically as compared to Metals X's Chinese partnership with further Australian tin production?
I'm not sure there's a lot of relationship between Metals X and the Chinese. Metals X and Australia. I can't speak on behalf of Metals X, of course, but they had made strategic investments. They had a very strong cash flow. They're looking for growth. They're taking up different options. So they've got their own option to grow rentails. They've taken a stake in our company. They're staking in other companies. So they're building these options. I think as you de-risk them, they will have their options to play. Of course, that'll come into any finance and discussions that we have. But at the moment, I'm not looking at Chinese offtake.
Okay, so other countries. Okay, and a traditional Australian project finance for the Australian project, is that possible?
I think it's possible. I have discussions with, let's say, the debt funds in Australia, which are interested. As we know, Australia is a very resource-friendly investment place. There's a lot of money there. But again, people want to see the line of sight on the permitting. And that's what we're pushing hard on.
Okay, so first step permitting.
A couple of potential financing options in Australia. But hopefully, I think that the financing and the link with the offtake and the cost of the financing, all these things come together. So there's going to be some trade-offs when we come to the discussions with the board about which option you want to take.
Talking about permitting, Bill, it's always the unknowable God event. When do you think the Australian Taronga asset for First Tin and the German Tellerhäuser asset for First Tin will be permitted and ready to build?
It's possible that we could have both assets with a permit in the next 6 to 9 months.
Okay.
Like Taronga first, it's now in the hands of the regulators. We've submitted the environmental impact statement. There'll be a public exhibition period. They will look at all the submissions where it goes through the discussions with them. that can potentially take 3 to 6 months for that to happen, if all goes well. The German situation is different. Because we're in the fast-track permitting in Germany, we don't do a core environmental impact study. We submit separate studies related to water, the forestry, and so on. And we expect to submit the last piece of that for the surface water by the end of September. And then theoretically, the process is about 6 months then for the Mines Authority to review, to come back with a life mine permit. After that, you then do an operating permit in Germany, which is probably another year. Before you're ready. In Germany, we'll then have to do a DFS before we get bird ready. Longer. I recently recruited a projects head, and we're already looking at the timing, the priorities, the early works on the ground, what we need to get organized. How do we link that to the detail engineering, the early mobilization, the procurement strategy, and so on. So we're already doing the groundwork to hopefully get a fast start after the permitting. Hopefully the financing follows very quickly after the permitting. So we could be mobilizing around the middle of next year.
So it sounds like before you're back here, September 2026, that we could be permitted on both the Australian and the German projects. Is that right?
We could be. With the German, with one subsequent permit to come. This life of mine permit's an important one because I think there's an open question around Germany.
Right.
Can you permit a mine? Yep. We believe we can.
Right. Do you think that First Tens are, like most junior companies, is a small company with two unfunded projects in one company? Do you think they belong together in the one company, or can you see a time in the future when they live in separate companies?
Yeah, look, I'm agnostic, Simon. As a CEO, I think the shareholders will ultimately decide the future. My role is to take these projects forward, provide options for the shareholders to go their way. Beyond these two projects, we have another portfolio in resources. So around Taronga, we have satellite deposits around 7 to 10 kilometers away. We have the Tinga resource, 70 kilometers southwest of Taronga, which is potentially another Taronga. In Germany, I have contiguous licenses in Auersberg and Dottersberg. So I have a portfolio of options here where I can, Horizon 1, get Taronga developed, Horizon 2, Taronga satellites, Tellerhäuser, Horizon 3, Tinga, Gottersberg. So there's a self-development standalone option there. You can look at what Metals X might want to do in the future. Do they want to consolidate? How do we fit in or not fit into that situation? You could look at an Australian listing for Taronga, separate out Germany. All of these things are possible. They're all options, and at the end of the day, we do what is right for our shareholders.
Makes sense. Bill, is there anything else as we look through the next year that potential or current shareholders in First Tens should think about? We might get a permit both in Australia and Germany. Do you need any more money? Are there any more resources that you need? And what's going to make the shares go up in the next year, do you think?
Yeah, so I think if I take the last point first, we are trading today at a tremendous discount, was it what one of the brokers in a paper said 6 months ago was our fair value. And they took our DFS and our PFS from Germany, gave them deep haircuts, all as we weren't permitted. And even with that, they had a fair value of 20p. We're at 6p today.
Okay.
That's a huge discount today. And I believe part of that is the LXD Frankfurt listing today is IPLISCO.
Right.
Re-rating will come with the permitting.
Okay.
Firstly, then there'll be more when we show the financing. There'll be subsequently rating. Then ultimately, once you're in production, there'll be another re-rating. And so I think the light is at the end of the tunnel, the shareholders. We have sufficient money for quite a few months through the next year. As to whether we do a little top-up or not, I think that depends on the line of sight and how the permitting might take in Australia. I have the cash to see it through.
Yep.
But if the permitting comes, the share price is constructive, if it allows us to accelerate work on the ground, it's something we might look at in the future.
Okay.
It's an option.
So permitting and advancing the financial solution for the two projects you think is shareholder friendly, and what do you think the tin price does in the next year?
Tin prices are just going up.
Okay.
Last year, I just did a chart where I looked at the last 12 months. So one from about 28 to 34,000, and there's a straight line across all the bottoms of the little trends.
Yeah.
Straight line through. And there's been two big peaks in that period. It went to 38,000 when Bissy went out. It's come down, so the trend is clear. And I expect that trend to continue. But more importantly, you don't have to have heroic assumptions on demand for that to happen.
Right.
There's very low inventories. The L&E inventory is about 2,000 tonnes. So you got 7,000 tonnes on Sheffy. So very low inventory. And demand is edging up. Well, and when you get into the situation, tin price for the last decade has pretty much followed the 90th percentile and the cash cost curve.
Yep.
That's going up because you're dragging in artisanal transition with tin just to meet demand. So it's edging up. When you get in that situation, you will get periods of flyer in the price, or result you read a higher reduced price to get projects.
Right.
So there will be periods where it will fly up. But I think a general trend is to keep going up. And our DFS was at 30,000. So at 34,000, it's already a lot better.
Right.
If it goes to 40,000, it's even better.
That's dollars a ton for tin you're talking about. Okay. Bill, thank you. Thank you for that update. Looking forward to seeing you here in a year's time. Thanks for coming back to the Arlington Rapallo and enjoying the Tenerife Riviera.
Pleasure, Simon.